S&P 500 held up better than the NASDAQ. We're going to get into that in great detail and what caused this little mini crash today. There's a lot to go over, a short time to do it, so we're going to jump right in. If we take a look at the ES S&P futures, right to the 55 where you held, I use a 22, a 55, and a 100 on this chart. You should use what you're comfortable with. We can see how we held the 100, bounced right back over this level, and closed right here. This is significant. Why? The 55 represents institutional support. 22 for me is the bulls in charge or the bears in charge. And the 100 really is a kind of last resort kind of area. Really, it's the 200, but we've been using the 100 because it's been holding it in here. Now, if we drill into this just on a 5-minute chart before we get into the good stuff and just look at what happened here, you can just see very clearly Friday and just kind of rallying right in here Sunday night. And then from there, what happens? Here's your Friday, and then that's it, right? And so we just start dropping, and nobody thinks it's a big deal. Matter of fact, we were talking about this last night, how we were holding right in this level, and then out of nowhere, it just began to cascade. And then by the time that we opened, this is what we were dealing with. Now, what was nice about today is you could see right in here, you held. 930 opens up, never looks back. Matter of fact, S&P from that 930 open, it never looked back. There was nothing really to do with the ES from there. If you mark off that 930 opening bar on a 5-minute chart, you held. So if you're above that level, your buyers are in charge. If you're below that level, your sellers are in charge. And if you just look at things that simple, it'll make your life super easy, and it's pretty effective. And you can see how we held here and how we traded back over that 55. The ES and the S&P was not the problem today at all. Matter of fact, it held up exceptionally well considering the carnage. When you look here, you're down at 1.5%. And then when you get to the NQ, you're down 2 times that. So we're going to jump into this right now. We're going to go through some fundamental analysis as well on what's going on, what some of these investment banks had to say. I think that's really very important for us to get and wrap our noodle around right now. And we've had some stuff here that we have not seen in some time, and we're going to have to address it. But for tech, it was not a good day at all. We broke some key levels. Here's the 22 and the 55, and we went through that like butter. We're trying to hold that December level. Hit it, bounced, have not retested. We'll see if we hold that 21,000 or not. Right now, you're trapped between 21.5 and 21,000. I don't think that you have to consider anything here until you're out of that area. Until then, you're really trapped in this space. And what's going to get us out is going to be some kind of earning model. And I really think that's what we need to focus on. So from my perspective on this is how you need to look at it. When you come out of this, that's fine. But take a look at this on a 5-minute chart, and then we'll kind of go from there. We do have a lot to go through. There is that 930 bar, and we can see that undercut where you came here. But that obviously had way more pressure to the downside than we were supposed to see. Obviously, way more pressure than we saw with what? Everything else. So let's get to it. Now, in this, we're going to include some more financial side of this, more analysis, just so you can wrap your head around this before we go forward. And I think that this is really important for us to get, okay? Here is DeepSeek, and this is what everybody is talking about. And this graphics is from Artificial Analysis, and it's important to get this because DeepSeek is on par with OpenAI, which is right here. They are getting a 90 score, they're getting an 89 score. And 27 times cheaper. So here is the rub. Now, whether or not the rumor is that this cost $5 million to make, or whether it cost 50 or 500 million, really doesn't matter. Over here, they spent $6 billion last year. So no matter how you look at it, they completely outperform their per unit of what they had to work. So this falls into the category of how were they able to achieve this. Now, when we started the day, everybody was very suspect of how this was going to play out. But as this developed during the day, it became clear that a lot of people are saying that this thing is for real. I am not an expert with this whatsoever, but I do listen to experts, and I do want to listen to what some of the research houses have. And we have guys coming out here like Andreessen and Horowitz, who are the guys that created Netscape, and they're talking about how great this thing is. You need to kind of pay attention to it a little bit. And when that kind of stuff starts popping up, I do pay attention to it. So what is the problem? The problem is that no matter how you slice it, they were able to outperform at a level that no one has been able to at a cost at a significant reduction, and they're able to offer it to the public significantly cheaper. So the first thing that happens here, the very first thing out of the rip, is ChatGPT. The amount of money that they spent to achieve where they're at makes them look foolish. And there's really no other way to say that right now unless this thing is a complete hoax, which it does not look like it is after some of the comments by NVIDIA today and by some of the comments from the investment banks and by some of the comments of the VCs. So the amount of money that they dumped into this is pretty staggering. And this might explain why NVIDIA did not do that last round of financing. It also might explain why a lot of these C-level executives recently left. So I do think it's capitalizing on a lot of the issues. It's starting to make a lot more sense right now. And it shows that Microsoft spent an inordinate amount of money on something that's probably nowhere near coming down the pike is going to be as effective per unit of dollar spent as this DeepSeek is. Now, there's other issues with this DeepSeek is it going to be allowed on people's phones? Is it not? One of the reasons Apple went up is apparently it's already on Apple phone, and we'll get into that in a little bit here. But we're going to spend a little time on the side here of just understanding what the heck happened today before we get into the charts. So Mark Andreessen is saying this is one of the most amazing and impressive breakthroughs I've ever seen, and it's open source. Now here's the thing about it, a profound gift to the world. Now here's really what's very interesting. This is the guy who created Netscape. You guys all know him as a huge VC, but when we had Netscape, we had no idea what to do with it. And this is what gets me about it. This is open. Essentially, it's free. It's open source, and they got it, and we're building off of what we see as Meta and their Llama. And now that's where it gets super interesting. So we're going to talk about Apple and Meta and why they went up today. But I want you to connect the dots with me. So just stay with me. This is not something I would take lightly when this guy says that. Okay? I just wouldn't take it lightly. Now, some of this stuff I don't fully agree with, where it says DeepSeek has not raised money from outside funds or made significant moves to monetize its models. I don't believe that for a moment. DeepSeek, it was run in the early days of DeepMind. It won AI investor meeting. It's poorly focused on research and engineering. China has much larger talent pool of system engineers than the US. Again, they might have more people, but when you have the US and you have what comes out of the US, it's usually better run. What I think has happened here, quite frankly, is that this has been funded. And I think it's very clear that this has been funded. And I don't believe for a moment this is off of, 4 H100 chips and a hamster. I'm just not buying that. Time will tell what's really doing it, but it doesn't matter. It doesn't matter how it was done. What matters is it's better, and it's better than anything that's been done so far. And that was the part when I came into this morning that I wasn't sure of. And as I see these people speaking about it, it's becoming crystal clear. Let me rephrase that. It's becoming clearer. Now, usually I don't get into this much detail, but this to me is a major shift. There's a lot to cover here, so I'm just going to go through what we see here in regards to how Goldman looks at this and what they were saying this morning. Some of this, if you're in the community, you already saw this early this morning. But what they're saying here, and there's a couple key words here. What makes DeepSeek important is not necessarily that it's Chinese or rapidly ascendant, most popular downloads an app, but that it appears to quite fundamental advancement in the efficacy of AI technology. Meaning, what you're getting for per unit of spending is the efficiency just jumped greatly. For a lot of complicated reasons, it's basically a huge upgrade to effectiveness of interference. By some measurements, 40 to 50 times more efficient than any other model out there. This is really where it comes into, because when you understand the efficiency, you understand why NVIDIA dropped. So as you start connecting these dots, you'll start understanding that. Now, if you're more efficient, what don't you need? Just like anything else, your body gets more efficient, you don't need energy. Right? This gets more efficient, you don't need energy. If you can do more with less, it naturally leads to a question whether you need so much capacity. Obviously, this will be a huge debate. I am far from an expert, and this is the guy from this, and I'm going to be very clear about this. I'm reading all this as it's coming out. I am not an expert on this field. But as this data comes out, I'm looking at people that I consider either experts or have access to information that I don't have, and I'm processing it together with you. So it will be a development, and it will change over time. It will be dynamic. This will not be static. But you did have some major changes in the market today that you've not seen in years, and we're going to discuss it. But given the immense amount of market cap added to this theme, we think hit hard reverse trends of last week. Okay. Power up baskets are going to power down. So what they were telling us this morning is the VSTs, the CEGs, the VRTs, they're all going to come in. Now we understand why NVIDIA has been derating the extent it is, meaning now they know why NVIDIA has been selling down the way it has been, because obviously people knew this. Obviously NVIDIA knew this, and it's why they didn't reinvest in OpenAI. It's also why they were in China recently, and Jensen was in China instead of being at the inauguration. Probably was looking at this thing. So I think that this is very important. But before we get into the single greatest loss ever on any stock in the history of the stock market, which was exactly what happened to NVIDIA today, and it is trading up a little bit, I do think we should just start maybe with the basics, and then I'll show you where we're going to go with this. So you can see the 55, the 12, the 22 up here. This is what happened today. And I don't really want to hold stocks that do this. Now, does it build in here and go from there? Maybe. But I've been in this thing for a long time. And when you start to see this and you start to see these kinds of breaks that you haven't seen, you really have to question what's going on here. That's not a small break. It takes a lot of money and a lot of selling to get this. And unless they're going to come out miraculously change and go, just kidding, I don't know what's going to get people in here. Now, you could bounce back around. You can trade around in here 100%. But this is a massive technical break. And this takes time. This takes a lot of time to fix itself. And it doesn't make me happy at all, candidly. And it's not good for the semiconductor space at all. On top of that, it's going to be very interesting to see what ASML is going to say this week as they have earnings this week. But here's what I really want to go through with you. So when you understand what they're saying, when you take that research and like this whole AI power side, when you look here today and you could see NRG's down, VST, like you knew not to go out and try to bottom catch these things. It made no sense because when you understand what I just explained, you know that the efficacy is up 40 to 50%. You don't need as much energy. If this is the case, which seems to be the case, and therefore you know, don't go near these. Well, if you don't need all that energy, you don't need all that space. If you don't need all that space, names like VRT are not going to be rocking and rolling here because you're not going to need as much data storage or management is rather a better way of saying it. You're not going to need as much cooling. Like it's all connected. Okay, all this stuff's connected. You're not going to need as much land, which is why this dropped and this dropped. Okay, this stuff's all connected. And when you see that, it explains why that's happening. And I think that's really important to get before we go forward. Now, I just want to go through this note from Nomura, and I'm just going to go through a part of it here. And what really got me about this was the way that he is viewing this. So the way that they're viewing this is now, yes, it's obviously the most downloaded app across the platforms, endangering the concentric circles of tech, the status quo asset performance leadership of NVIDIA, AVGO, SMH, Bitcoin, where the sudden introduction of cheap yet complete viable AI tool is self-guiding with its own trading via reinforcement learning without standard controls, magnitudes lower operational costs, not requiring massive semiconductor spend of the newest and most expensive chips. Are you getting the issue for NVIDIA now? So there's one thing that you have to understand about me after doing this for decades. I'm just going to tell you what's happening. I'm not going to give you my opinion. Okay, I don't want to do that. NVIDIA was rocking and rolling. This is a problem for NVIDIA. And this is why NVIDIA is selling down the way that it is. And their comments today where they were touting how great it was, it tells you that they knew this was coming and that there's a real issue. So and what does this mean? That you're not going to want the new chip? No, of course you're going to want the new chip. What it means is gross margins might be a problem. Okay, and they will get into that, I believe, in here somewhere. It's threatening the prior assumptions of the AI ecosystem, massive implications on pricing power. Pricing power, gross margins. Like, do I really need that? Are we there yet? Right? That's going to be the real issue. You know, I explained this earlier where I said it's the difference between playing Pong and Call of Duty. Just because they did something doesn't mean it's going to stop. It's going to keep going. But the speed in which it's going to go, that might change a little bit. Spending trends might change a little bit. For example, Meta going out there and saying we're spending $80 billion or Microsoft throwing $13 billion into OpenAI and they're getting crushed by somebody, it's an issue. It's an issue, and the board of directors have to start listening to those kinds of concerns. They can reel in CapEx on this kind of stuff. And I don't think people get that. That's a discretionary number. They can change the number at any time. A matter of fact, what actually ended the dot-com boom, just point blank, was CapEx spending reversed. That's actually what ended dot-com. More than anything else, it wasn't just the fervor of it. They went from positive CapEx to negative CapEx, which I don't foresee going negative CapEx here. I see it slowing, but they literally went negative CapEx, and that's what ended it. My personal opinion here on how this plays out, okay, and again, just from history, is that they slow their roll as they start trying to figure out what the heck's really going on here. That's where I think this goes, but we'll see how that plays out. I'm not really sure, but I think that slows down a little bit. Without the standard training controls, human demonstration or super fine-tuning critical, not requiring prior assumptions and cost that training necessitates, taking a larger leap, pushing closer towards self-improving AGI. In the meantime, concentric circles of tech, I've discussed mega cap tech, public equities, investment, overlapping massive wealth creation in the market in recent years. Now we're getting hot under the collar. Okay, particular where the issue of lack of breadth in stocks is prolonged leadership. This next graph is kind of scary. Huge mega cap tech weightings, probably EQ levels thanks to crowded one name potential, issues for dispersion. correlation traders, and down the road, knocking the marks, vol laundering private investments in the AI space. The stock, there's one more thing I'm going to go through there, which forced anybody with a global equities mandate need to chase and try to over-own the exposures. If you were going to try to beat simply paste benchmarks, and let me go through this, you didn't own this, so there, let me just find the line. I'm not going to have time to edit this out. You're going to have to just bear with my ramble. This is where we need to watch the risk of actual long-term reallocation. This is where we need to watch the risk of actual long-term reallocation. So what you're seeing is as tech's coming in, is they're going into financials. They're going into other sectors. Rebalancing flows in mega cap tech and even broad U.S. equities from foreign investors, particularly with EPS pressure and currency exchange. And that's going to tie us into this. Now, again, if you're in the community, you saw this a couple weeks ago, but here's what's interesting about this. The return of where you are in the past 3 months and realizing that if you didn't have these names, you were down. If you didn't have AVGO, Google, Amazon, Tesla, Meta, Nvidia, Microsoft, or Netflix, the S&P is getting hammered right here, okay? You can say it, 4-to-1, down 2.5. So what does this do? Well, there's a couple things to take into account here. First off, AVGO is one of the companies that these companies buy things from. AWS sells a product that they're going to buy things. When you start getting into capital expenditure, do you really think that Meta wants to go and spend $80 billion or Microsoft wants to spend $60 billion? They really don't. So if this can be more efficient, then what's really going to happen here is they're going to want something that is more efficient. Why wouldn't you want to be more efficient? It makes zero sense. Okay? Nvidia is not hurt by, Meta's not hurt by this. Nvidia is. AVGO is. Semiconductors are hurt by this. Okay? Microsoft, looks like they made a stupid investment. So that's going to be an issue, but whatever. It's a decimal point to them. I mean, $13 billion to them, quite frankly, is not even a third or a quarter of their CapEx budget for this year. So it actually benefits Microsoft and Metas of the world, even the Googles of the world, if they don't have to go out there and spend as much on the CapEx side. And I think that's being lost here, and I think it got picked up later in the day today. And I think that's a very important distinction that people need to just kind of wrap their noodle around. Now, I just want to point out a couple things, and I don't want to get too technical, and I really want your comments on this video because we're getting super specific tonight, and it's really important for you guys to get some of these concepts. But large cap, 3-month large cap equity flow since 2001. So where's the money been going in the market for the past 3 months? Right in here. You're at the 99.7 percentile. If the money's going to come out of the Nvidias, of the Metas, and of those names, where's it going to go? And I think it's going to transfer into other names. And I'm not so sure it's going to come out of the Metas and the Microsofts. I do think that semiconductors have an issue here, and it does set us up for an issue with the NASDAQ. And I just want to tie this all together so you can see it here, okay? So, and this too has led to second order influences in equity, shadow leverages from 2 sources. And they talk about real and synthetic negative gamma. I'm not going to bore you with this because a lot of people, I'm going to start glazing over. But grabbing tech, AI, semi upside is the market long, ton of delta that could act as a negative delta de-risking flow. As calls move to out of the money and puts are chased, meaning you start flipping the what? The gamma that starts putting pressure. Plus the levered ETFs, where they estimate 123 billion is levered in there, which is the 100th percentile. That's pretty high. Okay, and then you go out there and say the Mag 8 are 49% of the NDX. The Mag 8 are 49% of the NDX. Okay, levered ETF products where Mag 8 are 35% of the SPX weight. Okay, so what they would have to do is 88% of the total assets under management with said concentration overlapping the AI tech spirits, or 102 billion, which is now poised to sell and rebalance. Flows risk later today, where pre-market shows 22 for sale. So this, I know this gets somewhat complicated, but what they're saying is this becomes a self-fulfilling prophecy, whether or not it's actually true. And this is the part of the market. It's like literally that cartoon where everyone goes, buy, 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 and then by the time of it, someone says sell, and then they're all screaming sell, okay? And he even goes, which admittedly will be swinging all over the place on these underlying trades like drunken sailors today. Sorry, but it's kind of, and it's very actual, and it's very true. This was from UBS, and again, I'm trying to tie all this together, and we'll get into some charts, but you need to understand where this is all going. And they have a really good line in here. There's been some scrutiny surrounding the claim R-ROM was trained with 800 GPUs and a hamster. I'm throwing a hamster in for good measure. Some suggested it has access to 50,000 H100 chips. All right, if you go to Tuesday, and you go to CNBC and you look up the guy that spoke about this, you can go and look it up. And it's there. It's like a 7-minute clip on the CNBC site. He says they have this. and this is what they're doing. And he explains that they're just getting them from through restricted process, some kind of process that's going around the restriction. This does not detract from the efficacy, which I don't think it does either. Cost per token is 97% less than O1 ChatGPT. If anything, we think the model developers look to incorporate R1's novel tech into their own models. Even though this may read negatively for compute demand, even with the algorithm efficiency improving, they're reiterating their AVGO during the meeting. There and okay, maybe not. I think that the one line that they took out of this from this UBS was that they don't care. Same thing I did. I don't care if it's 800 or 50,000. They're kicking everyone's butt. Once it's confirmed that it's legit and they're kicking everyone's butt, that's the problem. Because it still shows an efficacy rating here that is 40 to 50 times greater than anything else. So that in and of itself becomes the problem. Then you come here, and I do like what he's saying here because he's more eloquent than my Pong in Call of Duty. R1 or O1 are endgame, and neither R1 or O1 are endgame for AI. They still have a long runway of development, much more compute than is currently available. So what he's saying is, yeah, like, so what? We're still going to go further with this stuff. It's a journey. It's not a destination. Now, some of these slides I thought were fascinating. This is who it's from down here, but this is the bull bear index, and they jumped right into this week. Like literally right into this week, into the inauguration, as this is coming down. So they are smack dab in the middle of it, and they are not hedged. And let me show you how unhedged they really are. This is from Goldman, positive short increasing. Okay, this is the least short they've been since 23. Okay, this is a real issue. All right, so people were caught off guard by this. How bad does it get? How good does it get? This is going to take time, guys, and we're going to be all over the place. And I can tell you one thing that you should take from this. Conference calls this week are going to be huge. And now you have Wedbush out there saying it's not a big deal. The market would disagree with that, while it's impressive. And I want to be really clear about this. Last night, over the weekend, I didn't know if it was two guys with a can and a string talking back and forth to one another. But the more you will see this, the model's impressive. The model's impressive. You've had that said over and over and over again in this video. It's not me that's saying it. It's these people, and this is what they do. So I think that's very important. Despite market fears, Fed actions, NVIDIA delays led by giants, DeepSeek advancements, no notable, don't pose significant threat to the established tech ecosystem. I think Wedbush is delusional, but I want to put this out there. To think that people aren't interested in how they can get 40 to 50 times the efficacy on the product that they're buying is ludicrous. Of course, it can disrupt the ecosystem, or we wouldn't have had that crash in tech today. And technically, when you're down 20, 30% the name, that's a crash. Now, I know we don't usually deep dive like that, but I think it's very important for what's going on right now. Some of those slides, if you're in the community, you've already seen. I think it's really important to spend time on this to get it. So why is Apple up? Apple is using DeepSeek on their phones, apparently, and they're using something called native. I don't fully understand it, how it's working. Based upon that and the access, all of a sudden, when everyone thought they were antiquated, now it's the cat's pajamas. Is it really? I guess we're about ready to find out on this conference call that's coming out on Thursday. I do find it interesting how you saw this today, and take a look at this. I think it's worth pointing out that that is significant volume today, and while tech's getting destroyed, they are buying this. The other thing that I would be very remiss in is not explaining one more key thing. When you saw this go from 625 and trade around the day, and we did a bunch of trades on this today. It was actually the best long trade I had on the day. And you have earnings coming out. And they have a lot of questions to answer, guys. This can go all over the place because he just committed 80 billion. But if you think about it, is he going to pull that back, and does the stock go up because you're going to spend less? See, the stocks aren't going to go down because you're going to decrease your CapEx spending. Semiconductors will. A matter of fact, where this could all lead when you look at names like NVIDIA, like here, but wait, there's more. I could do an hour on this easy. But like, see how like CRM's going up and all these agents and assistants they're talking about having? We're going to have these agents and assistants and we have to build. Well, all of a sudden the efficacy is now 40 to 50 times greater. Everyone's going to be able to figure out what they did. So once they start to do that, and that's why you're seeing names like CRM and Crowd and all these names and Snow. That's why they all did what they did today. That's why these names outperformed when the stocks got hammered. Because you don't need as many products of semiconductors to make what they thought they needed to make. Okay? That's the rub. The larger problem with this, before I go any further, is that the NASDAQ tends to not go higher without semiconductors. And from my perspective, and the way that I've traded over decades, it's real simple. I've owned this thing for 2 years. I don't own it right now, and it makes me sad. But I will say this. when you break like a 200-day moving average and you have something like this, you need to pay attention to it. And I know a lot of people are going to go out there, I'm going to bottom fish it, I'm going to hold it, it's going to go up. It may do that, but you don't know that. What you're better off doing in these environments is not looking at these names and saying, oh, I'm going to bottom feed it because it was just at 160, it's going to go back up. Okay, the same people thought this about Cisco. And I'm going to reiterate something that I just said because it's really important and I'm probably going to get into it. This is 2020. If you want to wait 25 years and the dollar doesn't devalue, you might break even. But what you want to do here is think about it this way. Okay, the same thing that killed the internet bubble was CapEx. So if these companies start saying we're going to decrease CapEx, these kinds of companies might go up significantly. They may go up significantly. Okay, certain companies like Meta or Microsoft, they may go up because that's all cash flow that goes back to their investors. And that's really important to get. So let's look at Microsoft. Even today, why did this trade up if it's so bad? It's not. It's not bad. So keep that in mind. Understand who gets hurt by this and who doesn't. That's it.